Much movement. Existing home sales for July, a little bit weaker than expected, but the trend is still ever so slightly up in terms of annual sales. Let's bring in an expert. Joining the company from Phoenix, Tanya Marchiol with Team Investments. Before we go any further, you know the real estate market. I want to ask you a question about it. These housing numbers came out 27 minutes ago. We're selling existing homes at an annual rate of 4.47 million per year.
Yes.
That doesn't seem to me to be a particularly hot number. I remember it was 6 or even 7 million a year.
A healthy market's 9 million a year, so we're not even half of a healthy market. So yes, I agree. Absolutely. We need to get back to that level. The one thing that I do want to point out, because I think we need to understand where we were and where we are today, is that between the second quarter of 2011 and the second quarter of 2012, these are the statistics. The median home price has risen 7.3%, and it's risen 110 out of 147 statistical markets. The existing inventory is down 24%. The distressed properties are down 33%. And of course, our interest rates are down. So we're moving in an upward motion, but we have a long way to go.
That's interesting, because you're making the case that it's a very favorable marketplace for an investor with a fairly long-term horizon. And that's who you're broadcasting to now, isn't it? Okay, so
that is.
I know where you're coming from. I want you to look back, because about a year ago, I think we're going to put it on the screen, we had one of your homes, you had it for sale. I think at the time it was $74,500. It actually sold for that amount, and that was almost a year ago. It was in Phoenix.
Correct.
It was 3 bedrooms, 2 bathrooms, as I recall, in a nice neighborhood. Sold for $74,500. I'm seeing, I think we had a contest, didn't we, to see what's it worth now, right?
Right.
I think we just showed that on the.
I
think we just gave that away. I think we just put it on the screen, for heaven's sake. So what is it worth now, Tanya?
It is worth $97,000. So it has absolutely appreciated 23%. That is what is happening in the Phoenix markets, in the Miami
Tanya,
markets, and a little bit in Denver.
Which neighborhood is that in? What kind of a community is it?
It's actually a community that went way down, and I would not have touched. And then as it started to climb, we saw the values and the school systems came back in. So the infrastructure actually was being brought back in, and it's really uplifted that community. That's in Maricopa. You have to remember that cheap housing and cheap rental rates really forced that boom. That was a $700 a month rental. Well, now that's a $1,000 a month rental. So not only have the prices increased, but so have the rents. And as an investor, you need to remember that.
Yeah, look, we've got to make the point that that's one specific market which was horribly depressed, but is clearly now coming back, Phoenix, Arizona. And by the way, congratulations to Kathleen Loretto. She entered our contest. It was worth $74,500 a year ago. What's it worth today? Well, Kathleen Loretto got it absolutely right. So congratulations to someone who knows a lot about real estate out there, Kathleen Loretto.
Absolutely.
Okay?
No prize, Stuart?
No, there is no prize. An honorable mention on this program. 3 times we said the name. Okay. Now, real fast, you made the point that home values are going really sharply higher in Phoenix. Rents are going up. You think this is going to continue at this pace, or have the bargains gone and we're not going to make those gains anymore?
Sure. So $100,000 is still a bargain. Absolutely. We have to put this in perspective. I don't know anywhere else in the country that you can buy a $100,000 home, rent it for $1,000, and really make that cash flow. So the bargains are not gone. However, what we do need to understand is we're not going to see 23% gains in 2012. We might see 6 to 10s. And that's a steady market. And that's where we want to be. We don't want to see sharp ups and sharp downs. We want to see constant climbs.
Okay. You got that right. Tanya, always good stuff. We appreciate you being with us again. Thank you, Tanya.
Thanks, Stuart.
We've just got some numbers.